Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Tellurian, just a recap of their Q4 results and a little bit about their recent transactions that they've done. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Tellurian, so this video should be for your entertainment purposes only, because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. Okay, so Tellurian, hey Transient Stacker, thanks for hopping on the stream. Tellurian reported their Q4 results. I'm going to go through, go through this, and I'm going to start right here with what I think is probably the least interesting portion of it, but it's still, part of the company, and that is their operations, right? And this is just their upstream gas production operations. They produce 16.4 BCF. Hey Travis, thanks for hopping on the stream. 16.4 BCF in the quarter, and that was actually down from 19.5 in Q3. Presumably because the gas prices are not what they expected. Their realized price was about $2.43 per MMCF for about $40 million in overall revenue. Their overall operating loss, I wasn't going to say negative operating profit, but operating loss was, $11.3 million. You can kind of net out of that their depreciation if you're trying to look for something that's a bit of a, more closer to a cash flow number. And so that depreciation for the quarter was $27 million. I guess that's depreciation and depletion and amortization, right? It's all that lumped together. So if you adjust that out and to try to get to sort of an EBITDA number, they were squarely in the positive from the upstream operations. But the overall company, had an operating loss of $24 million. So, that kind of nets it out to where the free cash flow, if you ignore the balance sheet changes and some of the spending on, driftwood and such, they'd be at about break even from their upstream operations for the overall company. And so I have some of the numbers in a little more detail here, which I will go through here. As I said, total revenue was just under $40 million. And here's what I mean, where their overall G&A for the company was actually $16 million, not the whatever they called it here, the smaller number, which gave you to an overall operating costs of expenses of about $64 million and a total loss from operations for the whole company of $24 million, since the upstream is the only one that actually produces revenue at the moment. So if you look at that, take out their interest expense of about $6 million, they did actually have some gains, I think, from some other hedges, but overall they had a net loss of $13 million. Hey, Stock Mark HQ, thanks for hopping on the stream. But as I mentioned, if I want to go from this sort of net loss number of, negative $13.5 million, let's say, for the quarter, if you add back in, if you're trying to get to a rough free cash flow number, right, add back in that, non-cash depreciation, depletion, amortization of $27 million in stock-based compensation. But then, of course, sorry, I guess I double counted interest expense here because previously I was looking at EBITDA. So let me just mark this out. That should not be there. My bad. But then you put on the what they spent to actually develop and acquire natural gas properties in the quarter. They actually still did a little bit of that in the quarter. Then they had the driftwood construction costs. They spent $32 million still in Q4 on driftwood. And so that was actually more than what I expected. I kind of thought that would be coming to a standstill, but they're still spending on it. It's not a ton in the scheme of the whole project, but it is still substantial given the state of the company right now. And then they had some other capitalized stuff that I'm not going to go through. Is it fairly small, $1.6 million. That gets me to an overall number where sort of what I'm looking at of about negative $26 million in free cash flow. If you exclude some changes in working capital and balance sheet items that, frankly, I'm not super worried about. Again, so this is not a real free cash flow number, but that's kind of the way I look at it. And so if you compare that to their overall, driftwood construction costs of about $32 million, you can see they probably would have been about flat, again, as I mentioned, for the overall company if they weren't spending to construct driftwood. So that's kind of where they're at. Just another note here before I move on. They did actually sell enough common stock to raise about $68 million in Q4. That's a dilution, which I'm going to go through in just a second so you know how many shares are outstanding at this point. They did call it out in I don't know if they had that in the press release or if it was only in the 10Q. Yeah, I guess they called out here, and they drove up for 14 1,000 piles at the site. They made progress on the concrete foundations. And they also talked about I guess maybe they don't have it here, but they also talked in the actual 10K about their long lead time items, right? And so they have mentioned this in a couple different places where they say, we made a lot of progress on driftwood, and that included, as I said, the construction, but also this continuing to have their place in line to have these long lead time items being constructed. And that's relevant as we talk through, the future direction of the company, as we're all familiar with. But I mean, that is relevant for them to continue having that value proposition for other people who are interested in liquefaction, to say, look, we've actually got a fairly firm timeline if we can get money now to then keep this going and have reasonable certainty on when you're going to start getting LNG. Anyway, so that is kind of what they did in Q4 in terms of operations. Now, let's look at their outstanding debt here. If you're not familiar, I'm going to go through this fairly quickly. Let me find, oh geez, it's too long. Let me search for statements of cash flows, because that one's always in the same spot. And I can find this real quick. Here we go. So looking at their balance sheet, right, they had about $75.8 million in cash at the end of the year. And again, I think they have a minimum as of now of $40 million that they have to keep because of some of the covenants on their debt. And I'm going to talk about their debt in just a second. But overall, then they had these borrowings, right, that are about $360 million. And that is really the more interesting piece of their balance sheet here. There's not a whole lot else that matters. Sorry, maybe I should also mention their property, plant, and equipment, right? And so they've got a lot here. So this is one of the reasons why I am personally still invested in the company, is even though they are diluting right now, the fact that they are exploring these sales of those assets, and that they still have, they've got significant progress on driftwood, right? They've actually spent a lot, over $1.1 billion of current carrying value on the balance sheet. That's a lot of assets to have for this company. And so if we go down to their debt, that's what's actually killing the company right at the moment. And let me find, what's this way to find this? Maybe go down to the convertible notes somewhere down here. Here we go. This is what I was looking for. So this is a table that does show their borrowings at the end of the year. And there have been some updates to this, which I'll go through after I just look at the end of the year state. So they had effectively 3 different types of debt. They had the senior notes. These are just the ones that bear interest at, I think, at 10%. They're just straight up debt. They're due in 2025. There are some covenants on those in terms of minimum cash balance and some liquidity thresholds that are pretty nasty that start in October of this year. And so that's really the big ticking clock that the company has been fighting against so far. They owe $250 million on those. Then they also have their convertible notes that are also due in 2025. These bear interest, I think, at, I want to say 6%, but they are, they're convertible. So that's why they're slightly lower interest, because they have sort of an embedded call option there. They owe $83.33 million on those. Then they also have the baby bonds. Those are due 2028. Those are at 8.25% interest, and the principal amount on there is about $57.8 million. I don't think they're going to do anything with those. Those will probably just stick around, right? Because by the time 2028 rolls around, either the company's going to be bankrupt, or they're going to have, driftwood, at least phase 1, locked in and be under, in progress. And so I really don't think they're worried about these notes here, because these notes also, I don't believe, have any onerous covenants like the 2025 notes do. So again, just super quick recap. They have the senior notes. I mean, they're all called senior, but when I say senior notes, I mean these ones here, the $250 million that are just straight up 10% interest due 2025. Then they've got the convertible notes that are also due 2025. There's about $83.3 million outstanding on those. That's going to be relevant in just a moment when I go through some of the updates that they've done since then. So let me jump to that, and then I'll jump back to the dilution. So if I go through their post Q4 transactions, they did one, they did one in January, right? January 2nd, right at the very beginning of the year. So it didn't quite make it on the 10K. And so that's why all this stuff is as of December 31st, as I'm sure you're aware. And now, they did this on January 2nd, which immediately changed things up. And this transaction, more or less, the big piece here was that they actually were able to issue some shares, 47.9 million shares or so. And in exchange, they basically paid off $37.9 million of principal from that $250 million note, those senior notes. And change a couple of terms on the convertible notes, and I can't remember which terms were changed from this transaction, which were from the next transaction I'm going to talk about. But I'm mostly going to just move on to the next one, because the big takeaway from this particular transaction was just that they actually reduced the principal balance. And so, just going back real quick, instead of owing $250 million as of January 2nd, 3 days or 2 days after this was all prepared for, this was reduced from $250 million to $212.1 million of principal on those most senior notes there. Now, then that gets us on to the February transaction, which I'm sure most of you are aware if you follow Tellurian, because they even put out a press release about it. They said it was agreement for debt and amendment to support the Upstream asset sale, and there is quite a bit to this. If you go in the details here, it's got a lot of clauses here. I'm going to give you kind of the takeaways that I got when I read through all of this, and then we'll talk about what that means for the company. So first of all, is pretty interesting that it requires the company to sell the Upstream. It requires the company to use its reasonable best efforts to sell its upstream natural gas exploration production assets, and then to use the proceeds from that to actually pay down the senior notes themselves. And again, this one, for terminology, once again, this talks about the senior notes separate from the convertible notes. Both of them are due in 2025. Both of them, if you look in the 10K, are called senior something or other notes, but really it differentiates between those just straight up debt 10% notes versus the convertibles at 6%. Those are called the convertible notes, and then the senior notes is what they call the $212 million that they still owe here on the straight up debt. And so basically they say, we, as part of this, I don't know exactly what the legal term would be to make the company use its reasonable best efforts, but they're basically saying, hey, sure, we're good, sell your Upstream. That's what we expect you to do, to use your reasonable best efforts, and then use whatever you make from that to pay off at least the senior notes. Not necessarily convertibles, but the senior notes. Hey, Walkaza, thanks for hopping on the stream. Just noticed you're here. Anyways, there's a bunch of other stuff in here. One of them is really that the minimum cash balance was reduced from $40 million down to, and I know this might be a little hard to read here, but I'm going to highlight it in case you can see it. But basically, as of before they did this transaction just a couple of days ago, their minimum cash balance or liquidity requirement was $40 million, and they got it reduced to $25 million starting now until the end of April. And then that increments up to $30 million basically through May, and then up to 35 throughout June, and then back in July it goes up to $40 million. And to me, I'm interpreting this as this kind of like them giving themselves a window to actually try to close this sale, because if you look at this, then they say, well, if you pay off the senior notes, the liquidity requirement is actually going to be reduced down to $35 million permanently. And if you are able to pay down at least some of the convertible notes, or the balance is under $50 million, then the liquidity requirement is down to $25 million, permanently, at least for the duration of those particular notes, right? And so that, I think, to me is sort of screaming out what their intended timeline is, or what their realistic timeline, is for actually selling Upstream, kind of both on the side of the note holders, right? They want Tellurian to sell off the Upstream assets so then they get their money back. I think they recognize they're in a fairly high risk state right now of not actually getting their money back, or let's say maybe not getting their money back, but having to go through some long drawn out bankruptcy proceedings, right? If Tellurian actually has $1.1 billion worth of assets on the balance sheet, they're not really, even at a fire sale, if they get any reasonable fraction of that, the debt holders are gonna get most, if not all, of their money back, given that they only need 30-40% of that. However, that might take a long time, and there's even still some risk in that, right? There's going to be a lot of extra legal fees and all that stuff, and who knows what those assets actually go for in a fire sale. So they want to get their money as quickly as possible, and so they're willing to sort of incentivize Tellurian to say, yes, get it done sooner. We'll give you some nicer, lower liquidity requirements for now to make things a little bit easier. And you have to ease up on managing your day-to-day liquidity and figure out how much are we going to, sell in terms of, share proceeds, et cetera, et cetera. But that's that's kind of the way that I'm reading this. And obviously on Tellurian's side, this debt has some pretty onerous covenants, and they're not in a great state right now, right? They have to continue issuing shares and making these even cash payments when the share price is under $1.30 or something, to satisfy all of the requirements of these. And so, they also want to sell this quickly. Now, again, how realistic that is, I personally don't know. I certainly hope so. And they have some language in some of these press releases. I can't remember which one. Maybe it's their earnings press release where they talk about having good discussions, about receive very favorable feedback from interested parties on the potential sale of our upstream assets. So who knows what that really means? We've heard a lot from the company over the years where they were, excited or had interested parties, strong interest. All that language doesn't really mean anything until they actually close a deal. But some of this gets to be pretty concrete. And I think also, some of this, where I can't even find the tab that I was at. These liquidity requirements, these are very real, where it's going to be easier for them if they can close this by the end of April. And once it gets into May, they have to have more cash sitting on the balance, more cash just sitting there. And that is just a lot more for them to manage right now, where they're basically aren't able to raise cash from natural gas operations. So that's getting into lots of other stuff, right? Selling shares and putting them in a pretty nasty place. Sorry, I see some comments on the stream. I'm going to take those. Transient Stacker says, would it be a good idea to make a deal to sell their upstream assets to a partner who will use them to supply Driftwood with feed gas? I think right now they just want to sell the upstream assets for as much money as they can get, right? So that sort of a deal could make sense. It could make sense if somebody was particularly interested in Tellurian, was attaching sort of, yes, we want those assets that you have, those upstream assets, and we will couple that with some sort of investment in Driftwood or some sort of agreement. Yes, like that could be, that could be good for them. But I think at the current moment, in terms of the upstream assets, I'm really interpreting this as they really want to get the max, some combination of the quickest sale or the maximum value sale that they can get. That's where they have Lazard, kind of helping them and advising them with this, where, I really think they're just trying to sell this so that they can get out of the state that they're in, right? In terms of the debt and not having enough cash, right? They have to dilute quite a bit right now, kind of just to keep everything afloat. And that's not really a good state to be in. And James asks, why do you think the market reaction to the deal was so negative? I don't know that it was really a reaction to this deal. Maybe it was, maybe it wasn't. I hate to say it, but 10% swings one way or the other kind of just seem to be just the norm nowadays with Tellurian. There's so much uncertainty. It's really just hard to say what's driving it up or down. I think this, to me, this sort of signaled what the intent was for the company and what they are willing to do, but at the same time, they're not all in the driver's seat. So what the company wants to do at the current moment, what seems to be plausible, they don't have everything in place to be able to make that happen, and they don't have, when I say that, they can't make somebody give them, $400 million for the upstream assets. They're going to get the best deal that they can get. And, presumably somebody will buy them for some price, but they might not like the price. They may not like the timeline that those folks are willing to work with them on. And so I think there's just a lot of uncertainty at the moment. Anything short of like a 30% swing one direction or the other, frankly, could just be, standard volatility with the current state of the company. There's a lot of uncertainty. There's still some potential in the company, right? That's why I'm still invested. Why I think a lot of you are still interested, at least, because you hear, I'm not going to say you're necessarily still invested, but it's Driftwood is still such a compelling, facility, and there's still a lot of value to be unlocked with that. So with the liquidity and the stock, and sometimes who knows, right? Like there's just a lot going on. I don't really necessarily interpret it as the market reaction to this deal was negative. Nothing was want to say nothing was concrete, but this was all sort of at the fringes in terms of the actual, what happened here. This is all still contingent upon them actually getting a deal done for the Upstream. And, a lot of the other stuff they talk about is still contingent on, in the long term, getting something through for Driftwood, right? Because if they fail on one or both of those, of course, the company is in a horrible position, and so I think you're seeing a lot of sentiment both ways. So, I mean, I don't know, like nothing in here jumps out as really horrible for the company, right? It to some degree, it also says, hey, we don't have anything imminent. We need to actually reduce our cash balance. Maybe this is, if I'm going to, I'll give you my best argument as to why this could have given a negative reaction. People could have interpreted it negatively. And it could be this. It could be this right here signaled, hey, we basically have nothing lined up, and we think minimum is going to take us into the middle end of April to actually get something done. That's two months from now. And that's saying they don't have anything lined up. They were just ready to sign on the dotted line. And, maybe some people said, that's too much uncertainty, I'm out. So that would be my best interpretation. It could also, I don't know. Maybe people were expecting something more from this. Maybe they didn't like the fact that they had to actually pay some, cash amount. And there was this whole thing around the top-up amount. And this was basically, if I understand correctly, because there's a lot of legalese in this. So take this for what it's worth. But in the January transaction, if you read through the details on this one, so on the surface, they exchanged 47.9 million shares, to pay off both the cash interest they owed of, $7.5 million, I think it was, and also reduce the principal down to, by $37.9 million. But there's this additional thing about the top-up payment, right? And they talk about this where they say, where's it at in here? Yeah, so they paid $4 million in cash from this top-up amount. And this is basically an amount where they said, we'll take this deal, except there's some other clauses once you go down into the, where's it at? Probably in one of these. I'll see if I can find it real quick. I'm not going to spend a lot of time looking for it. Yeah, so there's a whole bunch. Well, it must have been in the other amendment, or they had the details here. But they talk about this top-up measuring period. It's basically a period of time where they're looking at the volume-weighted average price of the stock. And if that's too low, then yes, my interpretation, again, not a lawyer, and I didn't even read it all in detail because there was a lot to it. But my understanding is they did this transaction, but then there's some period where if the stock is actually under what this exchange price was, which I think ended up being maybe 79 cents per share, Tellurian has to then pay them something else in order to actually account for the difference between that. Because these people want they want the value out of these shares, right? So they want to get these shares, but they want to actually kind of get this dollar value out of that. So they kind of said, well, if we can't, over the volume weighted average price of the stock over a period of time, we can't actually end up getting that on average from our sales of these shares, then we want you to pay us the difference. And that's kind of what this top-up payment is. So that could be another one, and they said if it ends up being more than $4 million in terms of that difference, then that difference is added back to the principal amount of those senior notes. So even though I said, after that transaction, they owed, their balance was reduced from $250 million to $212.1 million, really there's some amount from this top-up thing that could actually be added back on and increase that amount that they owe on those senior notes back above $212 million. So that is a little, it's just up in the air, and I'm really not sure. It was a little unclear when I read all of the stuff that I could read. Again, that's my limitations of being a software engineer and not a lawyer in my day job. So I can't really understand all this stuff entirely. So sorry, that's my best answer to why might the market reaction have been negative. Hopefully that was a little bit useful. I'm curious if anybody else has thoughts here in the chat. Anyways, one of the things here is it did actually reduce down the conversion price to $1.05 per share. There is a maximum on this, which is, I don't think listed in this 8K, but it is listed here where they said the maximum here, maximum number of shares is limited to 42.7 million shares that could be issued from those convertible notes. So, if you do the math there, $5 times 42.7, that's, $44.8 million roughly in terms of, how much of the convertible notes could actually be converted given those, maximums and that conversion price. A couple other comments. Brian Cummins says, I think this year's presidential election is going to play a big factor for natural gas. I don't know. It's hard to say. I think it's pretty clear that a Republican win would probably be more favorable for some of these things, like the LNG pause, and that would probably unpause things pretty quickly, and other regulations and legislation and regulatory decisions that need to be made would probably be a little bit easier to get done for companies if there's a Republican administration. But on some level, for Tellurian, who does already have a lot of the approvals, has all of the approvals as of right now that they need for for driftwood. Talking driftwood specifically, not necessarily natural gas, but for liquefied natural gas. That pause that's currently ongoing is really a, hate to say it, but a benefit for Tellurian because they already have all of those approvals. And so, that as of right now is a slight competitive advantage that they have. And so if a lot of approvals get done for many other facilities and Tellurian still doesn't have anything, on the books and signed for driftwood, that opens up a whole bunch more competitors to be able to get their approvals and move forward and now be in the negotiations as alternatives to driftwood. So, there's kind of some pros and some cons along with it for Tellurian specifically, I think. For LNG, other LNG facilities that are, still seeking approvals and such, yes, a Republican win would probably be very good for them versus a Democratic win. Just my guesses on those. Let's see. Up North Uper says, this isn't looking good. I'm upside down on it. Yeah, I think a lot of people are. I certainly am down on my cost basis in Tellurian. I always knew it was a risky proposition, and a lot of those risks have actually come to pass. And so it is what it is at the moment, right? There was no one point where I could say, yeah, this is really risky, but the stock price hasn't dropped yet. I'm out. I think the stock has actually moved pretty quickly when those risks have been realized, and I hadn't really had a chance to sell. Granted, that's not really my style. I usually buy and hold for quite a long time in a lot of my investments, so I'm willing to see through some of the risks, and there's still upside potential in my opinion, right? Like if they can sell, let me just go through this. Sorry, I need a quick drink of water. So if I look through kind of looking forward at the company, I guess maybe first of all I should talk real quick about just their dilution, and I'm not going to go into too much detail here because really the bottom line is all the way up at the top, the number of shares they have outstanding. You can see they've just been diluting like crazy. I think 782 million shares outstanding as of February 8th. That was a couple weeks ago, and that's obviously after, I think, issuing those shares to extinguish some of the debt. But, just a couple months ago when they did their Q3 report, I went back and checked. There was, at the end of October, there were 634 million shares. So it's been, 4 months? Roughly 4 months, maybe not even 4 months, like more like 3.5. And they went from 634 million shares outstanding to 782. That's a lot. And they're very quickly going to blow past the prior limit of 800 million shares. Now we clearly know why they wanted to up it to 1.6 billion because, they are blowing past the 800 million share limit, which is not, not great. It's really bad. There's no good about it, which gets to the current state of the company, what they're trying to do. I'm reading all of this as it's very, very clear they want to sell the Upstream. The big question is how much are they going to get for it? I think if they can get enough to pay off the senior notes and pay those convertible notes down, to where they're below $50 million. I don't know if I touched on this or not, but there's two big things that came out of this that I guess maybe I even still didn't mention. With the convertible notes, right? One of them is, so I mentioned that, maybe I didn't mention here, but they actually put up driftwood as collateral for the senior notes, not the convertible notes, but the senior notes here. They talked about, so they pledged the equity interest in Driftwood LNG Holdings under an indenture governing the notes. But then they also said, um, upon repayment in full of the senior notes. So this is not all of the notes, but just the senior notes. Substantially all collateral securing the convertible notes will be released. There's one other piece here, which is once they get the value, maybe I did mention this, once the outstanding balance of the convertible notes is less than $50 million, the liquidity requirement is down to $25 million. So if they can pay this down to under $50 million balance, which requires, I don't know, what's that, $34 million on top of whatever it takes to pay off the senior notes, then they're in a reasonable state, right? They'll have less than $50 million debt from these convertible notes that are due 2025. They'll have the liquidity requirement for the company will be $25 million, which I don't think is ridiculous for them to keep around. And that puts them in a state where, maybe I should look at it and say, how much do they need for that? So that's $212 million plus, what did I say? Roughly $34 million to get the balance of those convertibles down below $50 million. It's about $246 million. Let's say add on, a 10% buffer for them to have all the fees and overhead of doing the asset sale. They need, let's just round it off, $275 million. The estimates that I've seen online, and again, I did a super, super rough comparison last time to, what was I say? I can't remember who I did as a comparison. I think it was maybe Comstock, Natural Resources. I don't remember exactly. Some other natural gas producer, and just doing roughly on their production levels, I think it got me to about a number of $300 to $400 million of a rough estimate for those assets. Again, that's just a ballpark I was looking for. There's so many nuances to this, and I'm not in the industry, so I'm really not sure. I've seen numbers online between $200 and $800 million. I think 800 seems way high, but maybe 300 to 400, 500 possibly is in the ballpark of what's reasonable. And so if they can even get $300 million out of that, they ought to be able to pay off their senior notes and some of those, a portion of those convertibles to get them down to a reasonable state. And again, those convertibles will convert at $1.05 per share. So if they can actually do that and then make any sort of progress on, driftwood itself, stock price goes up, and now these can actually convert rather than having to be paid off. And so that might that might really be the plan for the company right now is to try to get at least $300 million from the upstream assets, pay down their debt to be, again, the senior notes totally paid off, convertible notes at least under $50 million, hopefully under $45 million really of remaining balance, so those can just convert off and not have to actually be paid off. And that really puts them in a decent position. But the other thing here, maybe I didn't note, is the ability for the holder of the convertible notes to cause the company to redeem on October 1st of 2024 as a result, as a failure to satisfy the liquidity threshold is eliminated, right? And so this was one of the really big things where I said there was this ticking time bomb for October 1st of this year. Even though they're due in 2025, there was this additional, there were these pretty high liquidity thresholds, higher than just the 25 million they had to have constantly, that actually stepped up on October 1st of this year, where if they, I can't remember what the number was, but it was much higher. It was something like $200 million, I think, in terms of the if the senior notes were still outstanding, and it was still even fairly high for the convertibles. But this clause being removed is one of the big things that actually gives them more a little more safety this year, where they're not going to hit some cliff on October 1st and now all of a sudden they're going into kind of default at that point. So that was actually a really big deal. Sorry, I see there's some comments on the stream. Transient Stacker says, I believe some people were hoping for an announcement of some type of deal to come out along with earnings. Yeah, of course. And that's why I say, may not necessarily be, that's a great point, that it may not necessarily have been the specifics of this that people were reacting negatively to, to the degree to which people were negatively reacting, but it may just be that this didn't match what their expectations were. Because, I think people have been, there was some speculation that once they got the FERC extension that they just, got a week or two ago. Sorry, time runs together. It hasn't been that long since it happened. But once they got that might have been one of the last things that was needed before a deal could be signed. And so, there may have been people that were really expecting that to happen pretty quickly. So that could have been some of it as well. Again, they're just in such a state of uncertainty right now where, I think 10% swings one way or the other are probably more the norm rather than really the market reacting to some material news. All right. So I think I kind of talked through a lot of it, right? Of what this really points to, from what I'm seeing and what I expect for the company. I think they are going to sell. They're trying hard to sell the Upstream. That's pretty clear. It's pretty clear what they're going to do with the proceeds. They are going to pay off these notes, and how much they can get for it, I really don't know. There is, if you look through the details, there was this study that was done. This is an exhibit to the 10K, where they did a net present value calculation, at a 10% discount rate for the total proved reserves, and they said, hey, that's $125 million. I think that's I don't know. Again, I think this is a very conservative way to value things. So I think this would be an absolute floor on what you could expect them to get for those assets. I think really realistically, this is below what they would get. I think this is only the proved reserves, and I know that they kind of revised down their estimates of proved reserves. Oh wow, lots of comments here, so I'll get to these in just a second. But I think the this does not account for all the acreage they could potentially tap into. They have, what was it, something like 30,000 acres, and they're using only a fraction of that right now. But I think there's more places they could drill wells. So it's really, it's really hard to say how this valuation, plays into what a future sale would be. I just don't think this reflects, actual market value. Let's see. Transient Stacker says, Wakaza says, how much gas do you pay per gallon in your area? I pay $4.17 in Oahu at Sam's Club. I'll throw in mine right now. It's like $3.69 per gallon here in Pennsylvania. That's what we're paying. That's for gasoline, obviously, not for natural gas. Transient Stacker says gas is around 55 pesos per liter here in the Philippines. Cool. I don't know what the conversion rate is on that. Sorry. Serge asks, where are we on the delisting deadline? So actually someone on Twitter shared this. I don't think Tellurian will be at risk of being delisted until it's under 20 cents per share. It's on the New York Stock Exchange American or something, and somebody actually they were able to share with me the requirements for that, for being continued listing requirements on the particular exchange that Floran is on, and I believe it was 20 cents per share. So I don't think they're at the moment at risk of being delisted. That is definitely different from NASDAQ, and I think that might be even different from certain of the New York Stock exchanges. I don't know the details of those, sorry. But that's my current understanding. So again, could be wrong, but I think 20 cents is really the threshold that we need to be worried about for Tellurian delisting. James says, 2 months into the reign of Martin, feels like decisions are being made, stale deals are back on the table, and something for better or worse is going to happen in the next few months. Yes, I agree. That is definitely how it feels. And look, I don't love the fact that they're selling upstream assets, and the real implication there, if you're putting on your critical thinking hat, really just means that the integrated model is dead, right? We're almost certainly going to be having tolling contracts. And I think I talked about this in my last video about Tellurian about a month ago, when they started talking about what are they going to, they going to sell the company, or they sell some assets. And I said, if they sell the upstream and keep trying to do driftwood, that probably means they're just doing tolling contracts, because that's what you can reasonably do if you don't control your cost for producing the gas. But something is better than nothing, right? The integrated model, they tried it for years and years and years, and it's not obvious to me why it didn't work. That all made sense to me. That's why I was invested, and I think lots of other people were in the same boat. I don't know if we'll ever know what actually happened there. But getting something, having the tolling contracts without owning the upstream is at least a lot better than nothing. So I agree with you. It certainly feels like they're trying hard to make this happen. And, that was even pretty clear when they hired an outside investor, right? Or an outside advisor. They can no longer kind of just, I hate to say it, but, play around by themselves and wait as long as they want for deals, and just, issue some shares, keep the company afloat. Like, now all of a sudden they're paying somebody else, they're being advised, and, to some degree they're actually even liable if that outside advisor is telling them, this is what you should be doing. This is the best course of action for you. We're the experts on, sort of companies in your situation. The executives are liable if they do something else, and later on it could be shown in court that they had a recommendation from expert that was stated as this is the best thing for your company, for shareholders, and that they didn't do it. So I really think they are trying real hard on that. Not to mention Martin himself owns, again, a bunch of shares, and I don't think Martin's on the payroll right now. So he's trying to just maximize the value of his shares, and this is he has more information than us. So I'm willing to give him a little bit of time and some trust to really see what happens, but it does seem like they're trying real hard. Let's see. Brian says $3.09 in New York. Wakaza says 98 cents US dollars in the Philippines. Wow, yeah, that's a great. At least says maybe I got that wrong then. Hi Pedro, thanks for hopping on. And then I guess that's how many liters are in a gallon? Yeah, that's I don't know that one off the top of my head. I want to say it's 2 point something liters are in a gallon, but I could be wrong on that. Anyways, let's see. Yeah, I don't think I had anything else really to talk about. I'll leave it on here. I guess lots of people on the chat. I don't know if y'all got any questions or comments on what do you think about everyone with Tellurian, where they're at. Does anybody have insight into how much they actually could make from a sale of the Upstream? I think that's I've looked at a couple ways to value it. Right, you can look at their production, you can look at their reserves, you can look at like their acreage. It's hard for me to find good comparisons because I don't know that there's a lot of publicly traded producers in the same basin where they are. And there's a lot of stuff with natural gas that I really don't know all the nuances of because I'm just not in the industry. So let's see. Dylan says, do we roughly know what they had spent on their Upstream that they are currently trying to sell? Don't ask yourself that question. Yeah, so I don't know, right? Because a lot of this, they've got this. They had a lot of these assets. I want to say about half of them before the Insight acquisition, right? We know how much they paid for the Insight acquisition. That was it late 2022? I think, if I can get my timelines correct. And they paid $125 million for that. I guess we could look that up real quick, right? Insight, Floran Acquisition. Yeah, August 2022. They paid $125 million for that. Maybe I was wrong. Maybe that was the majority of what their Upstream assets are now, in terms of 20,000 acres. Because I think they have 30,000 or so acres now, and so if they acquired these 20,000 in that transaction, that was the majority of what they have. And so they paid $125 million for that. They already had some Upstream operations even before that point. I don't know how much they paid for that because they've had them for years and years. And frankly, since even before I was invested in the company, they own those assets. They've been developing them over years slowly, but they own the acreage and such since before 2018. So for quite a while. So I don't know what they paid for those originally. But that gives you some insight, and it is frustrating, right? They bought these when natural gas prices were high, and now they're selling their assets when natural gas prices are at historic lows. So it's classic, classic bad trading. Buy high, sell low, not very good. But yeah. And Tracy Sacker says so. A deal by April, right? That's kind of how I'm, cross my fingers, reading the tea leaves. That's at least what the company seems to be attempting to do. Right. That, again, as I said, that's how I'm really, really reading this, where they say, drop our minimum liquidity down to $25 million from now till the end of April. And also, if we could pay off the senior notes and get our convertible notes under $50 million, keep our liquidity threshold to $25 million. It certainly seems to me like that's their target, is to get a deal done by the end of April for enough money to be able to get, pay off the senior notes, pay off enough of the convertible notes at least to get them probably down below the threshold where they could just convert them all if the stock price is ends up being above $1.05, and then that kind of gives you signal some intent from the company. Again, whether they can make it happen or not is not entirely within their control. So we'll see, but that certainly looks like what they want to do. So, and Worldwide Images asked, will Tel be delisted from the Nasdaq? So I talked about this just a moment ago. They are not listed on the Nasdaq. They're listed on the New York Stock Exchange, and in particular, the one that they are listed on, I think, has a minimum listing requirement of 20 cents per share, not $1 per share like Nasdaq does. So I think as of right now, they're not in danger of being delisted. If their stock price goes below 20 cents per share for a certain period of time, I want to say 30 days, then I think they are at risk of being delisted. So that, I believe, is the sort of the current state on that. Yeah. So we'll see. I also know, one of the things I'm a little disappointed at, this is just the last thing I'll mention before I hop off, unless anybody has anything on the chat. In Martin's letter, and I think somewhere in one of these, maybe in their earnings press release, they mentioned, reducing some of their G&A costs, but they didn't give any details on that. That would have been really nice to see. I think we'll have to see in the Q1 report how the numbers look, lower versus Q4 and earlier than that. But, they didn't really give us any details on that quite yet. I don't know if that means they're laying people off. I don't know if that means they are cutting executive salaries temporarily or what. I don't know. That was one thing that I was kind of hoping they would give us a little bit on, but they didn't. All right, that is all that I have. Is there anything else on the chat? I'm gonna give it just a minute. While I give it just a minute, I will mention to say, I do try to do these live streams about stocks or Bitcoin sometimes, about every Sunday. Usually it's in the afternoon, Eastern US time. Today was a little later. Sorry for that. If you were expecting it to be earlier. I do try to mention it on my Twitter account. I'm just at Dustin's Dollars on Twitter, or on X, if you want to call it that nowadays. At least on Sundays, I try to mention that. If you do care to chime in, I usually try to also post what the topic is going to be, so you can know if you're interested or not before I hop on here. There's something particular you'd want me to look into and talk about, let me know. I'm an individual investor. I don't have any professional experience, but it's a passion, hobby of mine, investing. So, if there's anything you're interested in, I might also be interested in it too. All right. Well, I don't want to keep you any longer. It doesn't look like there's anything new on the chat. I'm going to go ahead and hop off then. Thank you, everybody. Really appreciate it. This is, some great chat today. Really appreciate. I really enjoyed it. I hope you all enjoyed it too. So take care and have a good one.